Hey guys, it's Dave. Welcome back for another video. Today I wanted to take a first look at Intuitive Machines, ticker symbol LUNR, because it's a lot to do with the moon and NASA's Artemis program. This is kind of the new Spac on the block. It just went public about a week ago, so hasn't been trading very long at all, but it's already made some massive moves in the stock market just in terms of its price, and it's kind of a hot topic. A lot of people are talking about it lately. A lot of people seem to think that this is the next big thing, it's the next big space company, and a lot of other people seem to think that we should really be shorting this company. The valuation's out of hand, and if you want to make money, you should be on the short side, betting against their success. So I just wanted to take a look at the company, see what information is available for it right now, and give you guys my 2 cents. If you're interested in space stocks and investing and you're new to the channel, please do hit subscribe. I would really appreciate it. And for returning viewers, thanks for continuing to watch. Now let's dive into Intuitive Machines. So first of all, I just wanted to take a quick look at some other space SPACs that went public in the last couple years, and I think you're going to see a bit of a trend pretty quickly here. We have Rocket Lab, went public, had a big jump, and then kind of a long downtrend. Astra, similar big jump up, long downtrend. Terran Orbital, smaller jump, and then obviously big down. AST Space Mobile, big jump up and downtrend, although not quite as bad as some of these other names. Planet Labs, a little jump up and quick drop off. Virgin Galactic, a little bit different. It got caught up in a bit of a meme craze for a while there, and the stock moved for a little bit different reasons, but we did have a big run up and then a big sell off as well. So all that being said, I wonder what will happen with this new space SPAC when it goes public. What could it be? Let's take a look at the chart here for Intuitive Machines, and what do you know? First goes public, we have a massive run up. SPACs always go public at $10 per share, so it's very easy to track how they're doing. Not like different IPOs where the share price could be pretty much anything. SPAC's always going to be $10, so that gives you a really good baseline for how a company does. And we see that almost right away, Intuitive Machines ran up to $125 per share. That's pretty crazy. Over a 10x, just like that, massive run up. And then what do we have once again? A little bit of a bump, but then we do have the big sell off, and now we're back down to $22 a share. Still a little high for a SPAC, but definitely nothing like those numbers we were seeing. So you might ask yourself, well, Dave, if you're so confident on what was going to happen with this stock, why didn't you short it at $125 per share? Well, the preferred method for me, at least, for doing that would be to buy a put option on the stock, make it long-term if possible. But unfortunately, they are not yet available to trade options contracts on this company just because it just went public so recently, and it takes a little while for options to become available. So as you can see here, I wasn't able to buy any puts. The other option would be to just go short on the stock and basically sell shares that you don't have and then wait for it to go down. To be honest, I wasn't watching this stock that closely to do that on the day it went public. I'm not one of those people that thinks there's something inherently wrong with going short. Some people really hate it. They feel like you're kind of betting against a company, you're betting for someone to fail, and they feel like it's just wrong, you know, something you should never do. Personally, I think in investing, pretty much all's fair as long as you're not artificially manipulating the stock price, which I'm not a giant short that could affect the price of a company like some of these giant funds we've seen and talked about previously. So I don't see anything wrong with me going short on a company if I really do believe they're being valued in a ridiculous manner. I would only do this under the most extreme circumstances. Usually I'd prefer to invest in a company that I really do believe in, that I do believe is undervalued, instead of investing kind of against a company that I think is overvalued. But having said that, I did do it once before. If you're familiar with Nikola Motors, it was a absolutely crazy story of a stock. Basically, the owner eventually got charged with fraud and defrauding investors. The stock ran up hugely. He said he was going to be basically the next Tesla, and it was just a complete fraud and really crashed. So I did buy a put on that one, but my mistake, which I learned from, was I didn't have the time horizon out far enough. So these stocks can remain irrational a lot longer than you may think. If I were to buy another put on a company like this, I would make the time horizon as long as possible. So ideally almost 2 years, just to give myself as much time for the truth to come out, for common sense to take over, and for a stock to come back to reality. Obviously, this one, it happened very quickly. But you can never really know. You can't just assume that everyone else will be rational within a certain period of time. That makes it very risky to do. But again, I don't think there's anything inherently wrong with it. So if you were watching this and you wanted to go short it and make some money, more power to you, I think. Now that we're down here, though, in the 20s, what do we think of the stock going forward? Well, let's dive into it and take a closer look at this company and what they do. So, interesting management team. At least they do seem to have a great deal of experience. A lot of former NASA people, which I think came into play because they have a lot of NASA contracts, bringing in a lot of their revenues. They've also got some people from Blue Origin, Deloitte, Axiom Space, Space Force, Boeing, like a lot of big names in their management team. Lockheed Martin, obviously, another big space name. So they do seem to have some experience behind them. So they've got that going for them, which is nice. Their vision, just in case you want to get a higher level overview of what the company does, is they're a space exploration company establishing the lunar infrastructure and basis for commerce to inform and sustain human presence on another orbiting body. So a lot of what they're focusing on is really the new Artemis program to the moon, trying to get a human lunar colony on the moon, explore the moon, that kind of thing. Pretty niche market for a company to take, so I'm a little concerned with that right off the bat. Very reliant on the government for continuing with their Artemis program and not deviating from it, which is often the case when a new president gets elected. So that's one concern right off the bat, but this is kind of what they're working towards right now. So their big pitch is basically that we have a new space race going on right now, kind of like back in the Apollo era with the space race with the Soviets driving a lot of investment. So we have China really focusing on the moon lately, and Russia kind of teaming up with them, and this will drive American investment in the moon and kind of have that competition that will cause investment in this area to increase substantially, and hopefully they want to take advantage of it. Now, they've got 4 different business units: Lunar Access Services, Orbital Services, Lunar Data Services, and Space Products. Basically, when it comes to Lunar Access Services, you're talking their lunar lander. They also have a CLIPS contract to fly cargo to the moon, and they do expect this to grow over the next several years. They also have orbital services, which is basically satellite servicing and refueling. This is kind of interesting because it can also apply to Earth. You're basically refueling satellites already in orbit instead of just letting them deorbit and burn up. There are a couple other companies looking at this area, and I do think it's an interesting area for the future. Right now, a pretty small part of the company, though, from what I understand. Lunar Data Services, kind of like sending data back from the moon to Earth, back and forth. They have strategically positioned ground stations across Earth to offer coverage to the moon. They can also provide lunar network backup services to NASA and the Space Force. And then Space Products, which is basically everything else, space products and infrastructure, servicing engineering contracts, NASA awards for lunar mobility vehicles. That'd be like a vehicle, a rover on the moon, that sort of thing, power plants, human habitation. So they're expecting big growth in all 4 of these business units. Looking at the projected revenue, I think it's actually quite shocking when I glanced at this chart. A little unbelievable, really. So we'll see. Let me know down below if you're confident you think they will hit these numbers. So basically, we're looking at 73 million in 2021. That was actual, whereas the rest are estimates because this slide deck did come out before the end of 2022. So 88 million in revenue 2022, that's pretty well locked in from what I understand. Most of those contracts were already signed and agreed upon, so I think we can be pretty confident in this number for 2022. And that's not actually a huge growth from 2021, right? Like, it's decent, but nothing crazy. But then they're just expecting an absolute explosion over the next couple years. So they think they're going to go from $88 million in revenue to $300 million in revenue next year alone. Over a triple. I do have my doubts if they can do that. Usually like 50% growth is impressive. 300% growth, I see numbers like that, and I start to scratch my head and say, like, are we being reasonable here? Is there something I'm missing, or is this really too good to be true? And even then, from the next year, their estimate is going from $300 million of revenue to $759 million, which is more than another double. So really massive revenue growth. They're averaging it out, expecting 119% revenue growth from 2021 to 2024. But seeing as how 2021 and 2022 are already over here, we're really talking $88 million to $760 million revenue. That's really almost a 10x in 2 years. I have questions, I have concerns, and I'm just worried about how practical this could really be. Let me know how you feel if you've looked into this company further. These numbers just seem like way outside what I usually see when I'm looking into growth companies. They do have some government contracts, obviously, already, and they feel like they can leverage more contracts. And obviously, the Artemis program is scaling up in the next few years. But, I mean, it's not unheard of for the space industry to have delays. And I would be shocked if the Artemis program lands on the moon, people on the moon, that is, on time. So a lot of these contracts they're expecting could be delayed for sure. And, I mean, a lot of them aren't even locked in. So that's their projected revenue growth. That's kind of what was driving, I think, a lot of the excitement. If people are looking at this revenue chart and thinking, wow, that could justify a crazy high valuation, but only if they actually hit these numbers. So I do worry about them being a little unreasonable, although this is just a first look at the company. Near-term revenue visibility. Okay, so as I said, their 2022 revenue is pretty much all contracted, so you don't have to worry too much about that money coming in. Those contracts are already signed. 2023 revenue, we have 159 contracted. That's million, by the way. But then we have near-term, so these 118 million, the contracts are not signed, but they say they're probably close, and they're heavily linked towards these government-funded contracts. And then another 24 million, they think there's revenue opportunities that are not linked to for government-funded contracts. So if you're looking at this number, obviously extremely reliant on the Space Force and NASA here. Vast majority of the monies coming in the future years are coming straight from the government and from the Artemis program. You're really hoping this continues and investment in it continues. New governments, new presidents can change a lot. We've seen it happen many times before. Focus changes from the moon to Mars to asteroids, and things change along the way. The SLS is obviously extremely expensive and not reusable, and that's kind of the core of the Artemis program. So there's a lot of question marks around a lot of this, plus Starship. You have to rely on that being ready in order to bring humans to the moon. So if Starship isn't ready, you got delays there as well. And obviously, they do have those CLIPS contracts for bringing cargo to the moon, but not people. Just looking at the comparables here, they're comparing themselves to some other space companies. We have Rocket Lab in here, as well as Virgin Galactic, Virgin Orbit. They kind of try and pitch why they think they have the best value. They're basically valuing themselves on their year-over-year revenue growth, talking about how high that is, which I already went over. And it is extremely high. So if they really do hit those revenue targets, maybe they are cheaper than a Maxar, for example. As I said, I've got a lot of questions. I've got a lot of doubts about it. And really, I would need to understand it further before I would be even comfortable going anywhere near this company in terms of them actually hitting these numbers. Looking at the risks, they always have to share their risk factors with these investor presentations when a company is going public via SPAC. I just wanted to underline one line here. I've already talked about it, but it's a quote straight from the company. We depend significantly on U.S. government contracts, which are only partially funded, subject to immediate termination, and heavily regulated and audited. The termination or failure to fund or negative audit findings for one or more of these contracts could have an adverse impact on our business, financial condition, results of operations, and cash flow. So that's the other thing. These programs are planned. A lot of them are not already funded by Congress, and Congress can just decide not to fund them fully. It's happened many times before. It actually happened to SpaceX and their Crew Dragon missions, where they signed the agreements to develop Crew Dragon, and Congress just decided to underfund it and not allocate the proper funding to the program, and that set things back by a number of years. So the company didn't get the money needed to develop the spacecraft, and that same thing could happen to Intuitive Machines as well. Just a big risk to think about when you've got a lot of your eggs in one basket here for the Artemis program. And then the SPAC did not quite go as well as they were hoping in one way, which is the SPAC's kind of an interesting way of going public, and basically people can redeem warrants instead of staying with the company. And highlighting here, although Intuitive Machines said the SPAC trust could furnish the company with as much as $301 million in funding, shareholders opted to redeem a staggering $279.8 million prior to the transaction closing. So the shareholders redeemed their shares and got their money back instead of staying with the company, which means the company got a lot less money than they were expecting to. And therefore, they have a lot less runway to reach profitability than they were hoping. Something that Rocket Lab has done really well. They raised about $700 million, $750, I believe, with their SPAC. And something I'd be worried about is a cash burn. But unfortunately, we don't have a lot of data for this company yet because it's so brand new. We don't have a lot of 10Ks. We can't see, quarterly earnings or the year-end earnings, see how much money they're burning. There's a lot of questions with this company that I still have. They also did receive $55 million capital from an affiliate, so they did get some money, don't get me wrong, but definitely not nearly as much as they were hoping for. I did listen to the deal call when they went public, and they said that they're forecasting free cash flow positive in 2025, so they basically in 2 years from now, with strong gross margins from 2023 onwards. Their long-term gross margin would be about 52%, which is usually pretty good, 50% plus, but I really need to know their net profitability would be. Gross margin is not going to include things like R&D, OPEX, taxes and other fees, interest and stuff like that. So 52% gross margin sounds exciting, but what's the bottom line really going to be? I'm not too sure yet, and I can't see, what their SG&A, their administrative expenses are right now yet because we don't really have a lot of data on them, so I would be concerned there. Continuing on with the valuation. So if they really do go cash flow positive in 2025, they really do hit that crazy growth in order to become positive here that I showed, then that could potentially justify a decently high valuation for the company. But my opinion is that I'm just very scared by those numbers because they're just so out there. It reminds me a little bit of Astra talking about making launches every day, and then you kind of scratch your head at that and say, like, is this really feasible? Is there the customers for that? Just the numbers they're projecting seem so high that I have a lot of worries about it not being feasible and not really going to pan out. And it could just be one of those big craze stocks that people get excited about and continues to crash. So if that happens, the valuation here could still be quite high if they don't execute. They could, have a lot of trouble and potentially go a lot lower. There's also the risk, as I said, of those government contracts really relying on the Artemis program for almost all their revenue. And so many warrant redemptions, so clearly people did not want to stay with the company for some reason or another. and that results in the balance sheet being a little bit weaker than you would have liked. That's it from the investor presentation. Let's go ahead and wrap up my thoughts on the company. So honestly, guys, as I said, this was just a first look. I am not claiming to be an expert on this company by any means, but at this point, I think I would still be more inclined to the short side than the long side on this company. I think there's significant risk. The numbers they're projecting are extremely high. I just wonder how realistic that really is. And we've all seen delays in the space program, especially when you're talking in government before, not just private companies. I do expect a lot of delays on these and pushing out some of those revenues. The plus side is they do have a lot of former NASA employees. They seem to have a great relationship with NASA. They are getting a lot of these contracts, and they already do have some of these lucrative government contracts going for them. So I guess it's not all bad news there, but I just have a lot of worries around this company. I'm not currently going to take a position one way or another. I have to say, if somehow it goes back up to that 125 kind of level, even 100 plus, I think I'm going to have to go short on it. And I'm sorry if that offends anyone who thinks there's a moral reason not to short a company. Nothing against the people working there, or, I really hope they are successful. But at a $100+ per share valuation, I think that's just completely unreasonable, and I would have to try and make money however I can out there. Really, all's fair in the stock market. We're all out here trying to make money, and if you see an opportunity, whether it be short or long, there's nothing wrong with going for it as long as you're not manipulating the stock price, which I definitely wouldn't be. So how do you feel about this company? Are you a shareholder? Did you buy in when they had a run-up? I'd actually love to hear from people who made a lot of money during the run-up and managed to get out before the crash. It's definitely one I'll be watching closely in the future. I hope you enjoyed this video. If you are a fan of space stocks and investing in general, please like and hit that subscribe button, and I will see you in the next one. Have a great week. Bye for now.